What's going on, guys? It's your favorite mortgage lender, Abdel Khawatmi, Got Mortgages, and we are here for our very first episode of Deal Breakers to Deal Makers with my co-host, Mr. Matthew Marinino. Matt, what's up, dude?
What is going on, my man? Crazy weather we got going on right now, right?
Dude, it is, I've been literally sitting down since 8:15, I want to say.
Mm-hmm.
I have not been outside literally all day. But I hear we've got some rain and some snow and all that fun stuff.
Crazy. It was like crazy windy this morning. Yeah, I was worried about my hair blowing all over the place. And yesterday my wife's like, it's so beautiful out, and I'm so used to just working in my office all day, grinding it. And she's like for real, like open your window. So
Yeah.
I opened it and I could feel like the warm breeze. And then I said, hey, let's go for a quick ride. And, we took a convertible out. So it's a special treat.
Nice.
Yeah, she's like, don't get used to it. Tomorrow it's going to snow. And I'm like, you're right. And then it was snowing.
You can't make this up. And that just, I don't know why we still deal with this every single day in Jersey.
I don't know.
But
this year's been a little crazy. This year it's been crazy all over the country, though. So I don't know.
Yeah, 100%. Well, listen, I know you and I obviously have known each other for quite some time. We've had the opportunity to obviously collaborate with one another. I would say more than ever, probably over the last year, where we've had actual experiences of working deals together. Right.
Yeah, absolutely.
And you're usually the, call it, I'm the starting line where people want this, fair share of vision of a home ownership, and they come to us and we get them pre-approved. Well, you would hope they get actually pre-approved, which we'll talk about.
Yeah.
And then obviously, they get the pre-approval, they find a house, put an offer goes in, they get accepted, they close, and then, couple years later, whatever the case may be, they fall into difficult times. And then that's generally where you're there to step in to essentially negotiate for them on behalf of the bank, right? And to make the deal work.
Right.
Does that sound about right?
Yeah, I mean, if you want, I could get into it.
Yeah, I mean, I think that's the whole goal before we start talking about all the fun scenarios we've been dealing with.
Yeah. So, yeah, I mean, look, for me, like, it's a pleasure working with someone like yourself because, yeah, I get you as the front guy and you always answer your text messages. I don't know if you answer for everybody or not, but I like the fact that you answer for me.
Oh, yeah.
And then, I also like the fact that you, not sidebar, I like the fact that if you don't pick up, you actually have a live answering service, which nobody has, which to me is magical because anybody that I refer to you never comes back and says, I can't get a hold of him or I can't get a hold of his team. So for me, that's perfect. For me, working in the distressed side of real estate, I've been doing it for 21 years. And, I've seen some wild stuff happen, through the years. Starting in 2005 to now. When I first started in the industry, I actually worked for a mortgage company, but I didn't write mortgages. I did their marketing for a for sale by owner service, FSBO service. So it was weird to see things change towards at the middle of 2004 going into 2005. I saw things changing. And, along the way, have the highs and lows, highs and lows, highs and lows. And I always look for what's going to be the next trend. COVID, as far as I'm concerned, really drove house prices out of control. And, I'm coming across people that purchase properties, overpaid for the house, and also have to pay back a loan to their retirement account. That because they over leverage themselves and that buying a house. So we're seeing people that purchase properties from 2021 to 2023, 2024 even, that are in serious trouble where they're over leveraged on the house for a couple different reasons, whether it's the insurance, HOA, whether it was a job loss, whether they just assumed that the rate that they had was going to stay at that percentage. So I don't want to say it has a familiarity to 2005, but I'm seeing a lot of characteristics where people are trying to dump properties now, and I feel bad, but at the same point, I remember when my wife and I were sitting on the couch, I was watching the news, and they were like telling people, "Oh, talk to your mortgage companies, tell them you can't pay your mortgage." And I looked at my
Yeah.
wife and asked in her face and said, "This is going to be the next wave of foreclosures, 100%, because you couldn't go out. People were remote working. People were leaving the areas that they were in." I actually had a client that had one of those wireless IP addresses, and they put it at their in-laws' house. So it showed them that they lived in New Jersey. Oh, this is my new IP address, whatever it was, and it was bouncing to Florida. So they thought, hey, this is going to be forever. And that particular homeowner was like, oh, you're coming back in. We're going to start with hybrid. Then it was like the guy had to physically be in the office, but he lives like 1,400 miles away. How's he going to do that? So I'm hearing a lot more stories like that where people are like, oh, the remote thing, it will be forever, and we won't go back to brick and mortar. There are a lot of companies that are calling people back to the office, but there are still a lot of companies that are doing brick and mortar. But it's wild, man. The stuff that I'm seeing out there, wild.
Oh, I could believe it too. I think a couple things, right? Foreclosure activity I know is high in 2025. It's not 2010 high, right?
Yeah.
But it's high, right? And the exact stats for those of us who are watching now or later is you will see that in 2025 U.S. foreclosure market, this is off of the NJBIA website, reported scheduled auctions, default notices, and bank repos, 364,460 U.S. properties in 2025, which was up 14% from 2024, down 25% from before the pandemic, right? And then obviously nowhere near compared to what it was in 2010, right? That huge disparity, where I believe it was a 87% difference, right? Report filing 87% down from nearly 2.9 million in 2010. So I think that's the part that a lot of people are, right? What did you say? Fearful. But I mean, I hate to kind of say it, but sometimes somewhat like the writings on are unfortunately on the wall. And then we sit there and you've had circumstances where you literally have a deal to save, right? And that client, right, to the point of our pod, just does not want to do the deal, right? Wants to break that deal that you've worked your heart. How do you kind of combat that, right? Because I'm sure that's super frustrating to have to deal with.
When I'm dealing with homeowners that, forget 2021, forget, the 2000s, let's go back to, 2017, 2015, 16, whatever, like in that, we're getting files in all different aspects of all different phases of when, the original crash hit, which was in 2010.
Sure.
But, something that I looked up today before we got on here, looking at the top 5 states.
Jersey's up there, 100%.
What's funny? And I would have thought that Jersey would have been in the top 3 as of today, right now. Texas is number 1. And I'm going to tell you guys why Texas and why Florida is number 2. Then right behind it is California.
Yeah.
And then Illinois, and then New York. So the reason why Texas and Florida, well, let's get to Florida first, because I'm getting a lot of phone calls from people in Florida, and they're frantic. Their insurance when they first moved down there, might have been like $2,500 a year, and now it's like $10,000 a year, and they're like, what the fuck? Their association is up. Their car insurance is up. It's so unaffordable where you're near the water. So obviously, they're taking a beating down there. Texas, we're seeing a lot of people. There's so much more new developments being built in areas where there's older developments, and people are looking at the newer incentives from the builders, and they're saying, well, why should I pay whatever the standard interest rate is right now, where
Yeah.
I know I can get like 1.5% less, plus I'm getting incentives to buy brand new constructions. So try to explain to a bank that you have a property that's 10 years old, unfortunately, is almost obsolete in Texas because people are buying brand new properties, and they have the smart home features in it. And, some of the developers they're taking haircuts too, $30,000 to $50,000 off the price to make the properties work. So you have the new properties, you have the favorable interest rates, stuff. Even in Florida, the same thing. So how do you compete with a short selling bank or a bank that needs to sell a property for less because they have to not only compete with the newer construction, but they're also competing with the fact that those people might have overpaid during the COVID era, and they're tremendously screwed right now.
Yeah. We've seen our fair share. Florida, Texas, certain Carolinas, and stuff like that. I think the market's also, especially as we speak, at such a funky point. We were on a pretty light at the end of the tunnel, gear, and then obviously pretty much over the last 2 weeks, we've essentially wiped out the entire gains that we got on the bond market. So now rates are slowly trickling up a little bit, and taking it from there. But on a super shift in just positive note is clients are still out there buying, right? I mean, there's still trillions of dollars being done, in this industry annually, and a lot of people have gotten refi opportunities. We don't really do too many rate and term refis. I've never been one to do that fight for the bottom. A lot of cash out refinance opportunities, though. Put it to you this way: I've got a client, VA buyer, purchasing a property. He put, I think it was 5% down last year. I'm sorry, he put 0% down. VA put 0% down, right? Did some work to the house, hit me back up. He's a law enforcement officer, and goes, yo, I want to sell this property, but I'm not going to sell it until a year. I need to pull cash out, right? Because I want to put a down payment on a property in Florida, right? He bought it with me just past the year. January was, right? His value has jumped up to the point where he can take cash out. We took cash out. We're taking out $21,000. He's skipping 2 monthly payments, 10 grand, about $5,000 a month, and he's getting back at the closing table 11 grand. He needs 20 in order for him to put as a down payment towards a new construction, and we got him 21. Done.
Beautiful.
All his closing costs were rolled in the loan. Closing costs were basically the 2 months that he wanted to skip, and we were in the clear.
Beautiful. Right. How long did it take you guys to put something like that together for him?
Like the whole process?
Yeah, from application to end.
9 days.
So you say 90?
Nine.
Like 9, like 9, one shy of 10 days.
Yeah.
How are you guys? Listen, let's just jump into some of the stuff, some of the wacky stuff that you already know what I'm talking about. Yeah. So I brought you a deal that I needed to fund immediately. I mean, I don't want to say I was frantic, but I was upset because, the guy's lender was like, we need time. We need time. I'm like, what the do you need time for? What do you need?
Got it.
There's no time. We don't have any time. We're out of time. And the buyer, rightfully so, like, he dragged his ass. And it's easier when you can control the narrative. You know
Sure.
what I'm talking about.
Yeah.
So I said, dude, you want the house? You got to call Abdel. If you want the house, you want to close, you got to call Abdel. We have a time frame we have to close on there. I don't remember the exact time frame, but let's just say the guy
6
said,
days.
what was that?
6 days, I think it was.
No, but what was the time frame that I needed to close?
I think it was literally the 7th day.
I don't know if it was the 7th day. I don't remember exactly, but let's just say it was like
It was
13 days.
it was a tight, yeah. I know it was a
Very,
super tight window.
very tight. I mean, the guy jumped through hoops, and he got the deal done. But it was like every step of the way was a pain in the ass, all the way to the day of closing, where the real estate agent and myself had to pay out of pocket to have a contract to go to the house because your underwriter said what?
Yeah, so it wasn't even our underwriter. The appraiser flagged the appraisal report because there's bars on the window, and normally those bars on the window are supposed to have like safety handles so you can exit, right? Yeah, these were just straight bolted to the wall with absolutely no means for you to get out.
Right.
So yeah.
So I mean, they had to be essentially, ripped off the house.
Yeah, they literally ripped off the bars on the property, and the appraiser came, did the property assessment, and that whole fun stuff, confirmed that it was removed. We were able to do it. This was all literally the day of closing because it was such a tight window. By the time you got the appraisal, we're literally resubmitting for a clear. You're smacked with this, and you're like, oh, dude. But Matt, I think moral of the story with that one and all of them, and I talk about this and I preach about this all the time, it's just communication, right? Everybody knew what was happening the entire step of the way.
Right.
And as I always say, whether it's the news that you want to hear or not, positive, negative, whatever the case may be, we are going to deliver it to you 3 days a week, Monday, Wednesday, Friday, like clockwork. And then, as you know, Matt, right, the John Madden updates in between, everything happening along the way.
Yeah.
Mr. Realtor, you're going to know. Mrs. Realtor, you're going to know. Real estate recovery group team is going to know. And it just creates that there's never that room of confusion. One of the things that pisses me off so much is when a title company responds in an email and says, hey, do you guys have an update? I know damn well they don't do it on mine because we beat them to the punch every other morning and are doing it to them to the point where I have to be an ass sometimes and say, I'm not sure if this email was scheduled because I just freaking responded to you this morning.
They don't
do
read
you
their
do
emails.
that, I'm sure.
They don't read their emails.
Well, yeah, I know. Yeah, very, very, very true. And it's funny. I know you hear me say this all the time. Obviously, we're extremely, extremely techie. But I have never been more on the phone than ever before, purposefully, not as a bad thing, but because we'll sit there and I'm like, 1 Mississippi, 2 Mississippi. I don't think this client's understanding what we're trying to get across.
Right.
And then we're just doing it, right? And it takes it from there. What's been now on your end? What's been some of the crazy stuff that you've been seeing that have been deal breakers that somebody's watching later could be like, oh, I got to make sure I don't make that mistake again.
So that's actually today. We're working on. Well, we were just starting a file in New Mexico, and the house was previously listed. He didn't realize that he had additional liens on his house, and the buyer was worried about the fact that he had solar panels on his house and was getting skittish. And I walked through the whole thing with this guy before he was signing on with the Real Estate Recovery Group, what we were going to do, what the plan of attack was going to be. I hear all the time solar panels are bad, but if you did the cost analysis of what it really cost beforehand and what it costs now, in some
Yeah.
scenarios, they're really not bad. His scenario, he needed it. His electric bills were upwards of like $650, $700 a
Ugh.
month. But once he switched and went solar, his bills actually dropped. I think the bill itself and the cost of the unit was under $300 a month. So
Wow.
when the cost of the unit being underneath, it was like 50%. It was a no-brainer. I'm like, well, that's how we're going to sell it to the next buyer. We're going to sell it to the buyer. So that one, that's out of the way.
So
Then the liens are on the property that he wasn't aware of that needed obviously to be taken care of. So he was going to file bankruptcy. Now, all of a sudden, 2 weeks later, he's back with I'm going to file bankruptcy. I'm not going to sell the house. And I said, well, you spoke with your bankruptcy attorney? Yes. I said, is it the same bankruptcy attorneys from before? No. New bankruptcy? Yeah. It was like pulling teeth. Fine. I said, you don't want to deal with me. That's fine if you don't want to do the short sale. But you need to ask specific questions. And I'm having a conversation with this guy, and the homeowner's clueless. And I'm thinking to myself, he's going to call me in like 2 weeks, a month, or let's say 6 months from now, and say, hey, I still own the property. What do I do? I thought the bankruptcy, the house is gone. Like, they don't understand, like, the financial obligation, the financial burden is gone. But the physical asset, it's still there.
Still there. Yeah.
So if, God forbid, somebody gets hurt on that property and you get sued, guess what? That's your ass. So because the property's still in your name. So, and if you're not paying the insurance, now there's force-placed insurance on it. It
Oh
can
yeah.
be a complete nightmare. So I kind of like laid it out for him 60 seconds or less. And he wasn't fazed by anything that I said. One of the things I said, well, can you ask your attorney when you do your bankruptcy, are you rolling your property into it? Or forget the financial aspect, but are you surrendering your property in the bankruptcy? And he's like, oh, he didn't even talk to me about that. It's like, all right. I'm like, should I just put the property, your file on hold? What do you want to do? And he's like, nah, just close it. So I've left it open-ended. I hope he doesn't come back. I hope the attorney gets everything done for him and he can surrender it. He's one of those guys, like the what is it, the shiny it's the shiny syndrome.
Yeah. The shiny
Shiny
object syndrome.
object
Yep.
syndrome. So, and I get it. Like, I have ADD. I'm all over the place myself. I'll be working on files. I'll have, like, one of my VAs listening. I'll deploy them. I need you to do this. I need you to do that. And they're like, oh, well, we're going to do this first. I'm like, all right, okay, well, then do this second or third or whatever it is.
And then you totally forget what you were going to give them in the first place.
Right, I'm all over the place. So that was today's, madness. I was on the phone today. I actually took a picture of it. And I was going to block it out, but I'm like, why am I going to do that? Like, if anybody wanted to, like, call this phone number, they would have to say. I was on the phone. Hold on. If you guys can see this or not. Hold on. I don't know if you can see that or not.
Yeah. What is that? I see the contact.
See your phone number, right?
Yeah.
See, over 2.5 hours.
Oh,
That's me on the phone with a bank.
that's crazy.
That's me losing it on a bank, trying to find out, why they don't know what they're doing. That phone number is TD Bank.
Yeah.
And it's a horrible situation to be in. And the guy who, the agent who brought me in, was like, hey, I was going to give you a heads up. He can get a little, like, crazy, the guy, the homeowner, because everybody's bullshitted him. And
Yeah, he's frustrated.
well, the agent called me before and said, by far, you're the only guy who's got the furthest, like, down the football field to get to where we need to be. But it's like everything on top of everything. And it's like pulling teeth sometimes. Some of the files can go smoothly. And the ones I think they're going to go smoothly, I'll have an issue with the buyer. Or I'll have an issue with, with the seller. Or there's an attorney that knows it all. And the ones that are, like, so freaking hard, it's just all on me or, my lead negotiator to get these files going. So it's terrifying, but I wasted between that, the recap, the notes I had to put in the system, the two other phone calls I make. I'm into that one file for 3 hours. So when
Yeah.
a real estate agent says to me, I do short sales, I guarantee you those agents don't do short sales like I do. And they sure as hell don't note the files the way that I do with the platform notes. Because I never want somebody to come back to me and say, well, I don't believe this, I don't believe that. Well, I spoke to so and so on this date, this time, this ID, blah, 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 whatever. Like, it's important to put all that out there. But it's like, was like, one scenario after another. We closed the deal, this was a while ago, but it always pops up in stories when I'm telling people.
Sure.
There was a homeowner that we were helping, and I was actually at an event. This was a while ago. I was in Florida, and my lead negotiator was at the event. She's in the back, Leah, and she's like waving me like frantically. I'm in the middle of teaching a course.
Yeah.
So she's like, I want you to hear this. So I was like, all right, we'll put it on speakerphone. So we put it on speakerphone, and the bank is basically telling us that the what's it called? The loss prevention, not the loss, the oh my god, I can't remember the name of it. The company, the preservation company went to the house, locked this lady out. The lady is like outside her house. Well, it turns out that they took a ton of stuff out of the house. They pulled the video footage. They stole her parakeet.
Oh shit.
And her husband's ashes were on the mantle. And they literally, like, all the photos and everything, including the slid it off into the bag. Like, she got compensated by the bank because what they did was shameless. What they did to this woman, and I don't wish that on my worst enemy. She went away for like 2 days, 3 days. It was like a long weekend. She came back, her doors were locked, whatever. We're on the phone, talking to the bank, whatever. The preservation company was scared shitless because they didn't realize the lady had cameras in her house. So that ended really badly. They should have looked in there. They should have realized when there was a live parakeet in the house was not abandoned. The grass was not overgrown. It was just one of those things where they just went in there and did their thing, and then they dragged a ton of shit, broke it, threw it in the garage. Like the lady, she had all these memories with her dead husband, and obviously she had the ashes in a vase on a mantle, and to actually see on a video that she could replay over and over again, just see guys hand just throw like wiping it off in a plastic bag. Horrible, horrible. So you always hear stories like stuff like that, and you never think like anything's going on. I've got a deal right now. There's equity in it, but the house is in foreclosure. This woman went to a loan shark to get a loan. And he said, I can't help you, man. We got 8 loans on your house. You got eight liens. You got 8 liens on your house. Flipping out. Agent calls me, somebody I've done business with before, and says to me, hey, I need you to take a look, put some eyes on this. Let me know what you think. Told the lady, this is what I do. This is how I charge. If you have equity, you have to pay me. If there's no equity, the buyer pays me, whatever. Fine. Dude, we run a title. There's one mortgage and one judgment for $1,500. That's it. But
and what were the other ones? Mechanic liens or?
No, what I think is that, in all honesty, I think the loan shark was bullshitting this lady, not thinking that she's going to go to a real estate agent or look for help or whatever, take advantage of this old woman. Meantime, she's probably going to walk away upwards of about, hopefully, $450,000 from her house.
And that's the one that's not underwater, basically.
She's not underwater, but she owes, I think with the foreclosure and everything, she owes about $100,000 on her house. Crazy, dude. Crazy. And it all comes back to, it was her and her partner. Her partner passed away. She handled all the finances. I hear this shit all the time. I
Mhm.
didn't realize I had a mortgage on it, blah, blah,
Yep.
blah, whatever. I thought, the house was paid off, and then I got a foreclosure notice. I didn't know what it was. I thought it was an advertisement. I threw it in the garbage. I get that shit all the time. Um, 2 years ago, my wife did a deal. We got brought into a situation. Same thing. Husband passed away about 2.5 years earlier. Sale date, prolonged it, stopped it, listed it, cleaned out, staged what they had there with the house. My wife's a real estate agent, so she had
Yep.
the listing. It was referred by a friend, got it done, whatever. Along the way, we found out the mortgage was supposed to be paid on the. She thought I thought no mortgage on the house, whatever. She never really worked. Her husband took care of it. She was like a lunch lady and a school. Wow. Between the son and me, we did some research and found out that her dead husband had an account that she didn't know about, that the money was going into for the mortgage
To pay
payment.
the mortgage.
And the mortgage was in there and then some in that account. She never would have been in the situation that she was in. So she walked away with a hefty payday, selling the house again, equity sale, but again, foreclosure, doesn't know who to
Yeah.
trust.
The stress and the naive process. Yeah.
Bro, it's mind blowing. I'm getting a headache because I'm trying to think like these stories in my head, but it's like the same thing over and over again, and it's all about communication. They don't want to tell their family members. They're embarrassed. I got a lead from a guy who does the SMS messaging, whatever. A lot of wholesalers are coming to me now
Oh yeah.
because they don't know what
Sure.
to do with it. So, we're strategizing. I'm telling them what to do, and they're loving it. This guy gives me a lead. Paramus, New Jersey,
Yeah.
10 minutes from my house. Guy's got like $600,000 in equity in his house. He's with a horrible servicing company. Uh, they gave him, I thought was a pretty decent deal. Um, I was going to bring him to you to get him, maybe give him like some type of alternative financing or whatever. Uh, on his credit report, he says he has like a 740 middle credit score. But I'm like, forget the credit, dude. I said, any mortgage companies, great, great, great. But then when they go for a payoff, they're going to see you in foreclosure. It's going to be a
Yeah.
foreclosure payoff. It's going to be for an attorney. Guess what? They're going to go, dude, you're in foreclosure. We can't help you. On your payments. You're going to waste everybody's time. So he's borrowing money from family. I said, dude, get your shit straight. Get at least a year worth of payments back on
Yeah.
track, and then I'll introduce you. I'll introduce you to Abdel. There's only so much I can do. But I tell people, if you think you got a scenario out there, I don't care where it is in the country, call me. We'll figure it out. Whether they have
Yeah.
equity or no equity, easy.
I agree. I agree. And to that point, right? It's um, if you're someone out there, you have a client out there, right? And you think that it's a completely impossible situation, or if you think that this is there's no way, and you spoke to Mary Smith and John Doe, the art of being able to pick up your phone and call Matt or reach out to us, right? I mean, Matt, you've seen when you called me, you were probably like, "There's no freaking way this is going to actually get done." And it was right. And we've did situations, dude. I have maybe like 4 Save Me deals, as you know, very vocal on social when we share that stuff.
Yeah,
Um, 4 of them, right? In like the last 3 weeks, and they were all structured wrong, right? Like just incorrectly, in the wrong loan program instead of conventional. They should have been putting them in FHA. Talking to the listing agents who are cool about it. We've got one super difficult VA deal. But VA is very accommodating to certain buyers, right?
mhm,
Obviously, as they should, right? People who serve their country.
of
Dude,
course.
I've got one right now. The DTI is 64% debt to income.
Mhm.
but he's got good amount of residual income. He also is disabled veteran, so no tax exemption, right? Or gets tax exemption, no taxes.
Right.
And then he gets BAH, right? Which is essentially, for housing
Mhm.
with the VA, and the automated underwriting system takes it, which is so weird, right? Because your average conventional can only go to like 49%, FHA 56%. This one's at 64% right now.
Right.
And the prior institution couldn't get it done. And it was a very large, I call stadium lender, right? So we had our meeting today, right? As you know, with the Elevated Alliance, and a big point that we talked about was the hyper local visibility and the hyper local communication that you could have with a professional, right? And I
Yeah.
think, and I know you've got a wide reach nationwide too, right? Where you're not just doing Jersey, you dropped several states, right? You've dropped Texas, you've dropped Florida, California, all that stuff, and understanding that local market, right, is just so critical. Um,
I rely on the real estate agents to tell me what the market is in that area, right?
sure,
I'm not a real estate agent. I don't want to be a real estate agent. I got more than enough bullshit in my head now from the loss mitigation side.
sure,
So I don't understand how somebody could be a real estate agent and try to pretend to do what I do. I'm not saying there's people out there that aren't doing it, that don't have teams, but I would say I would think to be, more valuable, getting more deals,
yeah,
uh, networking with other real estate professionals and talking about their wins and what they could do. I like talking about my losses with people because I explain like, hey, like, the homeowner didn't want to move forward. It wasn't benefiting him or whatever it is.
yeah,
Or, you know, um, I had a scenario that I brought to you with a guy that had a house. He inherited it. Uh,
yeah,
he could have bought it. He tried to buy it previously at like 285. He couldn't afford it. I got the short sale down to like 199 or some shit like that.
I know exactly what you're talking about.
Exactly. He wanted to buy the house, but he didn't want to pay my fee. And he's like, "Well, you should want to do it for free and help me out." And I'm like, "Dude, you work for free? If you work the 40, the guy worked for in Atlantic City somewhere.
Yep, yep,
Like
I know.
if you work for 40 hours, I said, and you got your paycheck and it was, zero. What would you say? Oh, it's different. How's that different? You're relying on my skill, my expertise to get to where we need to be. You know, $85,000. That's a huge drop on a property. The
Yeah,
previous
and it appraised for more.
and Prince more. So, I try to explain to people like I'm like trying to jam a square peg into a round hole. I
Yeah,
need all parties to be on the same page. I just got referred a transaction. I get it's odd. I'm getting a lot of stuff of Instagram lately, and the agent called me today, and she's like, "Oh, I just realized that your fee can't get rolled into the transaction. They're cleared to close for tomorrow." But it's upside down. Like they're not closing, right?
yeah,
There's 5 liens on the property. It's an estate. Like, how do you not run title? Like, if you know a property is an estate and you're asking basic questions, you paying the taxes? Nope. Are you paying the insurance on the property? Nope. Is there a mortgage on it? Yeah, I think so. But you don't run title on the property? Like that to me, like that scares the shit out of me. Then you waste 2, 3 months to realize the
you got it.
property is in foreclosure and they've got 5 liens on the property. And, the buyer, like, I don't know, like, as a listing agent, there should be some type of warning signs that you would think that should be able to do it. And the agent's like, well, my team lead this, my team lead that. And I'm thinking to myself, like, lady, you need to jump that team and go to another team that's going to be proactive, one that's going to be like, I want you to make money because
Yeah,
all I did was waste time. So I said, look, if you want me to help, I'll help, but I can't do it for free. And it's the
sure.
same scenario where, I guess it's a first time home buyer trying to buy the property and they don't have the money for my fee. And I feel for that, but I'm not doing it for free.
No, of course
You don't
not.
have my fee, it ain't for me.
Yeah, I agree. And I think that goes back, and we'll wrap up on this note, is just expectation, right? We instantaneously, on several transactions we've worked with, right? It's always on our LE from the get, right? It's on there, as it should for many, right? Like I say with condos, the silent killer, right, is the HOA fees, capital contribution
100%.
fees, stuff like that, which I am not a fan of condos. If I had a choice, I would try to avoid doing them, just because they're like, we had one for one of our loan officers, died yesterday, non-warrantable. Dude, this association had less than 50% of the mandated replacement cost coverage to basically rebuild the association. So there's when you buy a condo called replacement cost
Yeah, of
coverage,
course. Yeah.
right? It's supposed to show 100% in order for it to satisfy Fannie. If it's less, usually you can get a non-warrantable exception. This one had $250,000 for replacement cost. The replacement cost to actually redo it was 508. So literally less than 50%, right? So we couldn't do anything, because by the time we got the master insurance, we're like, this is a problem, but we're gonna try. Sent it to the exception. They're like, no. I reached out to 7 different investor colleagues, and I'm like, yo, bro. They're like, dude, it's less than 50%. We love you, but yeah, no. Even like alternative financing, hard money guys, we're like, we won't touch this, because again, it's not about the unit. If the place burns down tomorrow with the
Yeah.
association, you are screwed, right? Um, but I think it goes down to expectation. It goes down to all the stuff, right? There's a lot of deals being made, guys. There's a lot of deals breaking out, and that's the whole point of what we want to talk on. Jumping on, sharing some of the stuff that we're dealing with, literally over the last several weeks, days, months, doing this once a month and sharing some of these value offerings. Matt, anything you want to end us off with?
I would love for people to want to come on
Sure.
and maybe talk about, deals that fell apart, something that could have been, a salvage transaction. I'd love to hear from other people that maybe watching this in a repeat. And I would like to have guests on here and people that you work with and people that I work with, and have them talk about the scenarios, right? So
It's a great idea. Yeah, I think you guys heard it best, right? If you're a colleague, partner, agent, any industry, right? Sales profession, construction, you've had a deal, you thought you pretty much had it secured, and then for some whatever reason, whether valid or not, did not go through. I think there's not a lot of us that are sitting there talking about some of the reality of the crap, the teeth kicked in every single day that we deal with. And I think it's important that we put it out there to the masses. And that's truly the whole point of this podcast. Appreciate you, Matt, as always. And we'll catch you next time. Thanks, man.